Business news now, and Fil Martino is joining us today. Hey, Phil.
Hi, Cynthia.
Nice to see you. Thanks for joining us. Now, we've been hearing a lot lately that it's a real buyer's market developing in the auto industry, so a good time for us to buy a car. And one major vehicle manufacturer is trying to regain a foothold in that industry.
And having some trouble. So Tesla stock moved lower today after the electric vehicle maker missed estimates on deliveries. Low interest financing, sweet lease deals, price cuts, and free charging boosted Tesla's global deliveries in the third quarter. The company says it delivered 462,890 vehicles from July through September. It delivered 435,059 vehicles during the same period last year. Sounds good, but investors were hoping for even better results. Analysts were expecting deliveries of 463,310. So Tesla shares down 3%.
Now let's turn to Nike. It's trying to temper sales expectations ahead of the busy holiday season. What's behind that? One would think that Nike was doing well.
Yeah, you would think so. Part of the problem, maybe people are shopping and buying other brands like Hoka. I think that's part of the problem. All right, just do it or not. Nike shares fell today after the sportswear giant withdrew its annual revenue target. The company also called off its investor day set for November 19th. CFO Matthew Friend tells Reuters pulling the outlook would give incoming CEO Elliott Hill much needed flexibility to evaluate Nike's strategies and business trends. Last month, Nike named Hill as CEO in place of John Donahoe as demand dropped and rivals such as Hoka gained market share, especially in high performance and innovative running shoes categories. This week, Nike signaled a weaker holiday quarter, even as it expects a slight second half improvement in revenue from the launch of new premium models. Nike stock down 6%.
6%. Ouch. Okay, now let's talk about stocks dropping. It's been about 2 years since Elon Musk bought Twitter, now X, and things probably aren't quite going the way he planned.
Remember that? Remember when Elon bought Twitter? Okay, so how much is X worth? You'd be surprised, or maybe not. Financial services giant Fidelity says that the social media platform formerly known as Twitter is worth almost 80% less than 2 years ago when Elon Musk bought it. X no longer trades publicly after Musk shelled out billions to take it private in October of 2022. But according to CNN, Fidelity has disclosed what it believes is the value of its shares of X. As of the end of August, those shares were worth just $4.2 million. That new estimate marks a decline of 79% from the $19.66 million that Fidelity estimated that the shares were worth in October of 22 when Musk acquired Twitter. The new valuation from Fidelity implies that it believes X is now worth just $9.4 billion, and Musk paid $44 billion for it.
Wow.
That must hurt. That has to hurt.
That has to hurt. Even though he is one of the richest men in the world, that still has to hurt. If nothing else, ego, right?
Yeah, exactly.
All right, Phil, always great to see you. Thank you so much for joining us.
Nice to see you, Cynthia.
You too.